Hello everyone. As expected last night, Fed kept the interest rate unchanged as it is for the sixth straight FOMC meeting, and it is what widely expected, so no surprise there. But the important thing for us to understand is what Fed chairman said in his press conference. Like, what's the future interest rate projection, how economy is doing, and what will happen to the labor market, etc. Since all these will define the US market and thus the global momentum and thus the Indian market. I mean, please look at this S&P 500 price movement. That itself explains completely what happened yesterday. Here, for most of the day, it was traded near flatline, but as soon as the press conference started, it started to increase and closed at the near highest point of the day. So, as usual, let's do a deep dive about what is said in the press conference. If anyone fancies seeing the whole video, please have a go. I will attach the video link in the description below. However, I'll provide the summary of that. Here, in order to easily understand, I will answer from our existing 4 questions point of view, such as: will Fed reduce any interest rate? How many this year? And what's the projection for next year, Jan 2026? What's his opinion on recent Jan and Feb high inflation data? Do recession averted successfully? What's the GDP projection and what's the impact of labor market? And finally, when Fed will stop the quantitative tightening? Just a bit of the warning. For none of the above questions, as usual, he didn't give any straightforward absolute answer. Rather, he answered all in the open-fashioned manner. But he did with more on the dovish side than the hawkish. So, first question. Will Fed reduce any interest rate? How many this year? And what's the projection for next year, Jan 2026? For that, he haven't changed the projection. Still, for the whole year 2024, he expects to do at least 325 basis point interest rate cut. Meaning, on Jan 2025, the interest rate projection will be 4.5 to 4.75%. Similarly, then for the whole year 2025, they expect to reduce further 325 basis point, which equates to Jan 2026 interest rate projection as 3.75 to 4%. So, more or less, the previous interest rate projection from the Fed chairman haven't changed much, which in turn now increases the interest rate cut probability for June month from below 60% chance to above 75% chance. All those were really positive and one of the main reason why US market becomes so bullish. Now, let's move to the second question. What's his opinion on recent Jan and February month high inflation data? This is the most worried question for the investors. For this, he said, this recent high inflation haven't changed the fundamental of price pressure, so they don't think this will impact the overall inflation in the long run. But on the negative side, he said, we cannot celebrate either that we controlled the inflation, so we can relax kind of. Simply, we can say he's not worried for now about the Jan-Feb inflation data. Then the third one, do recession averted completely in 2024? For that, as usual, he said he can't answer that 100% sure that there will be no recession kind of. But he and the Fed FOMC members increased the 2024 US GDP growth projection to 2.1% from the earlier just 1.4%. Similarly, they reduced the future 2024 end unemployment rate to 4% from earlier 4.1% projection. So basically, strong economy and labor market projection with interest rate cut possibility. Then coming to our final question, when Fed will stop the quantitative tightening? He said they are very near to stop and now they started to slow the pace. But more detail about the tapering plan he will give in the next FOMC meeting on May 1st. So, overall press conference conclusion. He still believe and acknowledge inflation is dropping, labor market and economy is strong, and at least 3 rate cut in 2024 and signals that no sign of recession. Because of this dovish press conference, US market becomes super bullish, increased crazy. S&P 500 moved above 5,200 all-time high value for the first time in the history. In the end, Dow Jones increased 1.03%, S&P 500 up by 0.89% and Nasdaq up by 1.25%. In case of VIX, from around 14, it dropped to 13. And this US market positivity transferred completely into GIFT Nifty. Today early morning at 3 a.m. Indian Standard Time, it moved again above 22,000 mark and closed at 22,053. So for now, it's indicating gap up opening of 100 to 130 points. Regarding Indian ADR, Wipro alone closed flat, but all others closed on a positive note. In comparison, yesterday in the Indian market, only ICICI Bank was positive, all other three stocks were closed negative. So we can say Indian ADRs indicating the possible positive trade today. Then coming about oil, it dropped 0.5% after this 1 week recent rally. At the time of this video, Brent crude closed at around $86 per barrel and WTI crude trading around $81.5 per barrel. As a summary, US Fed chairman spoke very dovish with his very positive projection, which in turn made US market, GIFT Nifty and Bank Indian ADR all positive. And GIFT Nifty indicating the gap up of 100 to 130 points. Even before that, Reliance GDR closed positive of over 1%. So let's hope for the positive trade today. Moving on, yesterday as per stock open interest, Infosys, Hindustan Unilever, Bajaj Auto, Laurus Lab, Axis Bank, HDFC AMC and Hero MotoCorp got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Maruti Suzuki, National Aluminium, SRF, MCX, Marico, ICICI Bank and Coromandel International got an increase in open interest with a positive price close indicating the long build-up. Then about the things to look out. Around 10:30 a.m., India's manufacturing and service PMI data is due. Then around 2 to 2:30 p.m., Germany's individual PMI data and whole Europe's PMI data is scheduled to release. Then in the night, US PMI data, then weekly jobless claims, Philadelphia Manufacturing Index, house sales data for February month and Fed balance sheet are some of the items we need to keep an eye out today. One more thing about institution. Yesterday, FII again turned as net sellers. The net sold for 2,600 crore rupees, but equally DII net bought for 2,670 crore rupees. Coming to technical, yesterday Nifty opened marginally higher, but as an intraday low moved down near 21,700. However, immediately rebounded in the late morning and remained positive for rest of the session. Thus, on the daily chart, Nifty formed a doji candlestick pattern indicating the tug of war between buyers and sellers. The hourly momentum indicator suggests the exhaustion of selling pressure and there is a sign of positive divergence and is currently having a positive crossover. So, in terms of price pattern, this could lead to broader consolidation between 21,700 to 22,000 mark. Around 21,700 is the crucial support, coincides with 78.6% Fibonacci retracement level of the previous rise from 21,530 to 22,526. Then in case of Bank Nifty, it encountered another round of volatility with the ongoing struggle between buyers and sellers continuing. Bank Nifty fell closer to the long upward sloping support trend line but regained significant losses from the day's low 45,829. Then it finally defended the 46,000 mark and closed at around 46,300. Thus, on the daily chart, Bank Nifty formed a high wave kind of candlestick pattern. The hourly momentum indicator has a positive crossover, which is a buy signal. So, the key support lies within the 46,000 to 45,800 zone and maintaining these levels on a closing basis suggests slightly more inclined with bullish stance. The immediate resistance is at 47,000, coinciding with 20-day moving average, and a decisive close above this level could reignite the upward trend, targeting levels around 48,000 to 48,500. As per the weekly options data, the maximum call option open interest was at 22,000 strike, followed by 22,300 and 22,200 strike, with meaningful new call option writing at 22,300 strike and then at 22,100 and 21,900 strike. Whereas on the put side, the maximum open interest was at 21,500 strike followed by 21,800 and 21,700 strike, with new put option writing at 21,500 strike and then at 21,700 and 21,800 strike. Thus, from the options data also indicated that 21,800 to 21,700 are crucial levels for further downside, with resistance at 22,000 to 22,200 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.